What's going on, guys? What's going on? What's going on? It's 10:23 p.m. The cryptologist has signed in. It's been too long since I last streamed the lives. The live the streams. Stream of the lives. Today, we're going to be talking about Bitcoin. What else? Always like to talk about Bitcoin. And the reason for it is because there's some ish going down. Just the way it is. Bitcoin has been going down. Since 69K, there has been very little relief. No rallies of the relief. And unlike some other bull markets that have ended with cat bounces giving us 20% increases to try to exit our bags, this was not the same. It's a very swift exit and very clean cut, no return, going back to zero. Sorry guys, you missed the boat. We're not coming back. It's all over. Rug has been pulled. You were scammed. Bitcoin is a joke. It's not really sound money. It's not our saving grace. No hope will be found in Bitcoin. It is just to steal your money and run. And all the people have ran. You are left holding the bag. I'm just kidding. Sorry to scare you. If you're new, that was a joke. It's still good. Bitcoin's good. When in doubt, zoom out. We'll get to that later. But without further ado, want to break down Bitcoin today. If you like what you see, if you like my lame jokes, my terrible sense of humor, you keep coming back for more, subscribe. That will tell you when I jump on live. And hey, like it too. That affirms that I'm doing a good job, or I'm so bad that you just feel bad for me, you hit the like button. So either way, please show me some love, por favor. That's how I know that you like it. Anyways, digging in. We got Bitcoin pulled up. Talking about the OG only tonight. Starting with the weekly chart. Currently, we're sitting at 36,700, but I want to zoom out and rewind just a little bit, just to paint the picture of how we got to where we got and why and what to look for and when you'll know there's a reversal. So we have been trading in this range since the beginning of January of 2021. Approximately bottom of the range would be around 28, 29K. Could call it 30, all the way up to 60K. Could call it 61, could call it 59. Either way, we're looking at about 30 to 60K range with some deviation here. So we had a nice run up, correction, but bottom range, and this is what formed the range and started this diagonal trend line up. Then we had a nice bounce after the tag of the bottom of the Bollinger Band, after the top tag here, and closed above the middle of the band. This orange pretty line is the 20-day moving average, and we found support off of that, and nice little pivot J hook there all the way back up to the top of the Bollinger Band, and couldn't quite sustain this run up here, which caused this deviation, and the first signal to me that we were in for a little bit of trouble. Once we claimed a new all-time high on the weekly, on this weekly close here in October of 11th, 2021, was previously 60K, closed above here at 61.5. We consolidated for a couple weeks and ran up real nice. Had a very terrible upthrust wick here, which then proceeded with a terrible bullish or bearish engulfing candle that absorbed the last month of trading and closed back below the previous all-time high weekly close at 60K. That, my friends, November 15th, was the first indication to me that we were headed in the wrong direction, albeit had still some hope for a potential quick reversal, potential fake out, but again, confirmed with a second weekly close below the all-time high of 60, the previous all-time high of 60K. below the last weekly close and signaling more downside. So, proved to be true. Hindsight 2020. But again, I digress. The third week below 60K, we went after the 20-day moving average, the top of this pivot here, and the diagonal run-up trend line that had 3 touches and seemed to be a valid support at this point. All converging at 51.8, 52K, right around there, 51.5, in which it was lost on one gnarly weekly candle close. Let me just tell you guys, this weekly candle was bad. I mean, let's go back to May 10th, 2021. Let's see. The high was 59.6. The low was 43. So, yeah, that was about 16K swing there. The next one, 46.6. It's about 16.6 there. But, guys, this weekly candle had a swing of 59.250 at the top, 41.42 at the bottom. So this so far, correct me if I'm wrong, but this so far looks to be like the craziest swing in a week, about like 18K, 17K, and had a close below all of those converging lines that could have acted as support, but ended up not. And after the close below, we had a retest of the 20-day moving average and the horizontal diagonal line, in which it got rejected, which again signaled more downside, and we did close lower. And then we had a little chop in this zone where we retested the horizontal support 2 more times, and finally we got a close below this trading zone. And just highlighting in red here, this is a significant level. We got 3 bounces over here, a couple bounces over here, and even one little wick over here on the same plane. So I would say this 46K level is definitely one to watch moving forward. And you can actually also see this last run up, we had a retest in this range, and this is the weekly time frame. So zooming in, you'll see a lot more significance in trading in this range with candles, but there's a lot less on the weekly time frame. But even so, you can see 1, 2, 3, and 4 touches showing significance in this range. So 45 to 46K should be in the shorter time frame, or in the short term, I should say, will act as, again, resistance when we get back up to this level. Now, close below on the bottom of this pivot over here in September 2021. It acted as support when we closed below this chop zone, and then we held above the week after, and then big drop below. And now you can see on the candle body closes, well, it acted as support on this, or as resistance on this last run up, in which we couldn't get a close back above 43K on a weekly close. So you can see this was a evening star pattern on the weekly time frame, which is would signal more downside after that, in which we already are experiencing that, and why now leading to where we're at now and what I think will happen from where we are now. I think inevitably we will be heading lower, in my opinion, before going higher. And I've highlighted in green a significant horizontal level. As you can see, there was support built at this level with multiple touches over here in June in the summer correction phase. And we had a wick at it here and below it here, but this should act as decent support. But I will say that this shouldn't be looked at as very strong support given the current global climate with Russia and the Ukraine and Canada and all ish hitting the fan across the board, across the world. This will be weak in comparison to any kind of catastrophic event that will spook the global markets. This will be shredded through. But talking in Bitcoin terms, without anything else affecting it, this could be an area where we might bounce in normal times. But given the times we're at right now, I have very little faith that this will hold up against any major sort of news that could impact the price. But nonetheless, still looking at this level for potential bounce. I'm always looking for longs long term. I'm a long-term investor. I believe in Bitcoin. I think it's sound money. I think this is a strong hold over the long term. I can show you here in a second why again. But looking more short-term, narrow vision, this, with what's going on, could be lost pretty easily. And then you'd be looking at the bottom of the range at 29 and 30K. And that will be the last line of support for the bulls in the short term. And nobody wants to see this again, because if you remember back in the summer of 21, everyone thought when we got down to these levels, we were heading to, low 20s. It was all over, doom and gloom. The fear greed index was looking very bleak, and looking over crypto Twitter, it was just, everyone thought it was all over. But Bitcoin did what Bitcoin does, and that was the bottom in the short term, and it sent us back to new all-time highs, in which retail buyers FOMO'd in, and everyone was calling for the moon. All influencers were saying Bitcoin's unstoppable, don't sell, keep buying, this is great, Bugatti, Maserati, Ferrari, all the Aris, and Bitcoin did what Bitcoin does and shook out all of the weak hands, people buying at the top, and swift was the move down, just like the move up. There was no solid base of support really built between this move, except for here, in which we chopped for a bit and then crushed after we lost what I think was really the end of this bull run at this converging area, this middle section of this trading zone. Also, the 20-day moving average could pull up some other indicators, but for me, this was really my indication that it's time to start looking at exiting some of the alts, looking for more short positions. But so back to where we're at now. I think, guys, trade cautiously. Bitcoin is really what I'm focused on mostly now, because trading alts at this stage of where Bitcoin's at is a lot more difficult unless you're looking for shorts. But really, the market moves with Bitcoin. Unlike other markets, trading any kind of stocks, Forex, whatever, you're looking at mainly just that and any kind of news that can impact that. Bitcoin's the same. Trading alts, you have to watch for any news that impacts that altcoin. Look at the fundamentals, the technical analysis for that chart alone, but also you gotta look at Bitcoin, because if Bitcoin dumps, usually it tanks the market, and then anything that tanks Bitcoin will also tank altcoins. So right now, the level of difficulty to trade altcoins is high. It's high, hard, very hard, double, triple, black diamond hard. But so that's why really for me, I'm more focused on Bitcoin and watching for some good long setups. If we start losing some of these key levels here, there will be some great gravy short opportunities, because I have highlighted in orange the last two naked points of control in which there was no trading back within that range after it had run up. There's no wick back down to regain a point of control within that range after it was lost. And so the last one you can see on the weekly time frame was 19,000, and then right before that was about 11,000. So I don't think we're going to be headed back down to the 11,000 naked point of control anytime soon. Really don't think we'll get back that low unless World War III happens. Then all bets are off and anything can happen at that point. But realistically, from where we're at, if we lose this bottom level, not saying we will, but if we do, really strongly need to start looking at this 19,300 level naked point of control as a potential target for as low as we might go. Also, I'll bust out the VPVR, the volume profile. And looking here, you can see that, this lines up perfectly the strongest point on the weekly VBVR lines up perfectly with this naked point of control at 10,600, 700, and a lot of low volume in between. But sliding over just to look at this range, you can see that there is a big spike in volume at this naked point of control at the 19,000 level. There's one in between around 23,005, which we might see a bounce, but again, there is a big gap between where the most volume has been in between, 2020 to now. So losing these high traded volume areas, horizontal levels of support, it's just no bueno, especially with what's going on right now. It's just operating on thin ice. These Bitcoin can cut like a knife very swiftly. As you can see here, this $17,000 swing from wick to wick, it can happen very quickly. So just be careful, be aware. I'm saying all this so that you are very cognizant of what could happen, where it could go, and what you need to be doing to properly manage risk when you're entering these trades, knowing the full picture, not just the moon boy picture. I can give you all kinds of fractals to show you where we could be going and only looking up, but also important to look down just to know how far, how low can you go? How low can you go? Hey. Anyways, now for a little bit of hopium. Hopium number 1. Let me get rid of all of the indicators. Starting on the weekly time frame from this last peak in June 2019, it perfectly aligns with these bottom two wicks here in 2021 and 2022. The top two wicks of the last two all-time highs in April 21 and in November 21 line up perfectly, which form this nice, pretty little channel. Do I have a lot of confidence this will hold up in high duress? No, I do not think this will hold up under some hectic, stressful circumstances like we're in right now, but definitely good to hold and file in the back of the brain because maybe it does. And if we do get a bounce at this low end of the range around 34,000, 34,500, 34,700 with some bullish divergence, things start clearing up in the world, then this would be a good area to start looking for longs. And maybe, just maybe, you play it back up to the middle band. Don't have to be so aggressive with a long from down here to play it up to the top. But, I mean, if we're going to be playing it from the bottom area here all the way up to the middle band, you're talking about a 39-40% move. So definitely a good long setup if we start seeing some cluster of candles holding down here, rounding out down here, possibly forming a lower high, or I'm sorry, a higher low on the weekly time frame. Because as it stands right now, we're still holding above this last low cluster over here. So no reason to be super scared just yet of the worst case scenario, but it's close enough to be aware and trade cautiously. So this is one. Number 2, I wanted to just zoom out for you on the 2-week log chart, getting rid of all the indicators, only looking at this pretty drawing that I put together for you. Make sure my head is out the way. All right, so looking at this pretty drawing, you can see this is the index. This is from the beginning of time. From the beginning of time. This correction in 2010 at 1 cent. Dear Lord, bring me back to this time, back to the future. Give me a time machine and I will get all the Bitcoins. I will put all the dollars on the table and steal all liquidity. I mean, can you imagine? I wish somebody would have told me about Bitcoin in 2010 or 2011 or 2015. I mean, I would have taken $156 Bitcoin. Anyways, from that low to the run up before the bear market, into the terrible bear market of 2011, there was a 312,000% move from that low to the high. From the next low of the bear market to the high that started the next bear market over here in 2013-14, it was a 62,000% move. So less of a move up, still insane move up. Then from the next low in 2015 to the next high that marked the top, 12,000% move up. Again, a lot lower incline, still crazy percent gains. Now, from 2019-18 lows to where we've gotten to now, is it the end of the bull run? I think so. For the short term, yeah. But maybe not. Let me offer a little bit more hope. We're at 2,100. So if this is the end, again, significantly declining in each bull market growth. This being the fourth. This would be a significant tapering off of growth in each bull market. But one thing I did want to point out is this nice, pretty curve where we've had 1, 2, 3, 4, 5, maybe 6 over here, maybe, but 5 touches showing significance, right? So that's capping off the growth, which makes sense with the percentages I've showed you. But if we were to pull a fib extension from the top over here to the bottom over here and zoom in, you can see that we perfectly tagged the 1618, which is a target on the Fibonacci extension for traders when you're looking for where a price could get to on when it's an all-time high, uncharted territories. And so this was perfect if you were trading this using the Fibonacci extension. You would have had a perfect exit or opportunity to short at this level. See it consolidated here and it started showing weakness and boom. But it had a very strong bounce at the 12712, which in a bullish chart, this a lot of times will happen where it'll consolidate up here and it'll keep moving up. So we have not lost this level yet. And a slight deviation above the 1618, but pretty much tagged it again and held price down again. But still, we're trading in this range, the same range that I talked about on the first two charts. And looking at this fib extension, you can see it's so cleanly trading between the 1618 and 1272. And so it just tagged the 1272. And now you can see that this middle 1414 is offered as the bounce on the run up here. And once we lost it, you can see that on this last week, we couldn't get back above it and we closed right below it and then got sent right back down. So I do think that we may be going after this 34, like I said, on the first chart that I showed you, maybe even as low as 32.6, potentially as low as 30K in that more daily time frame range. But until we lose, this is the Hopium chart, right? Another Hopium chart. Until we lose this on a 2-week time frame, I mean, we're looking Gucci. Now, let me give you another picture in which it could get worse, but still not bad. Big picture. We get down to 19.8, the last all-time high from 2017. Well, in a lot of charts using fib extensions, I trade a lot of altcoins. There are coins that are just so stinking hot that have run-ups like this that can bounce from up here, or is even as low as 786 and keep moving on up and just keep crushing the game. the problem with Bitcoin is that people hold this harder than most altcoins. Some people hold Dogecoin the same, which that's a whole nother conversation. But Bitcoin maximalists out there, this is more of an investment. People do trade this, but there's a lot of new traders. There's a lot of new investors. There's a lot of investors that have held this for a long time that when they see swings like this, it makes them scared. Even being in the market for a long time, they quickly forget that, you know, when in doubt, zoom out. Look at this. From the beginning, looking at the monthly chart, it just keeps going up. These are blips in the radar. Okay? But zoom back into 2 week. Again, when you see it, when you're zoomed in, paying attention every day or weekly to the charts, if you see a correction from, you know, 69K all the way down to 19 or 13, that is scary. It can be very, very scary. But really, as a trader, when I look at this, this would be an amazing long opportunity. So look for these to start showing as bounce areas with bullish divergence, some candlesticks to support a reversal at these levels, you know, rounding out. But really, guys, like breaking this 30K level, going all the way down to 20, going down to 13.5, it will be scary, but look at them as great buying opportunities. This is not financial advice by any means, but if I could give you one piece of advice that sticks, buy into fear, not into strength. And, you know, you don't have to buy all at once, but if you scale in and you understand certain levels, which I'm trying to help with, you know, they will be winning trades, winning investments in the long term quicker, sooner than later. Now, you know, I do want to show you one thing. So if you were to have bought, looking at 2 week, if you were to have bought at the high over here in 2011, well, if you have 3 to 4 years to invest, not even trade, just to invest and hold, you'll be profitable. And this is a fact. This is not me, you know, in my opinion. This is a fact based on looking at this chart right here, right now. 2011 high. In 2013, you've been in profit. If you held for 2 years. In 2013, if you bought at the high, and later that year, you've been back in profit. If you bought the high in later that year in 2013, November, it would have been a lot longer, but it would have been 4 years and you'd been back in profit. And then in big profit. And then in 2017 high, in 2020, you're back in profit. So 4-year windows, it usually Bitcoin runs up and well past it. Now, granted, so far this year, it's only been about 2,100% gains from the previous all-time high. Put it back over here. From the low to the high, 2,100. But as a long-term investment, this is a great buy. So buying into weakness, buying into the red, into the blood, is always better than buying when it's at the top. But even if you're buying at the top, if you're going to be betting on an investment in this market today, where there's a lot of uncertainty, doubt, fear with what's going on, Bitcoin is a safe haven, and it's been around since 2010. It's fungible. It's sound. It's divisible. It's permissioned. It's unbiased. There's no discretion. It treats everyone equally. It's some of the best technology ever invented. There's just so many great things about Bitcoin and what it can do. It's easily transferable. I could go on and on. So big picture, guys, don't freak out. Zoom out. Look at what's going on. Buy into fear. But in the short term, I do want to highlight, if you're trading or if you're an investor, that it could get worse in the short term. My odds are I think we could go at least to 35 down to the 30K range in the short term. If we lose that, I do think that 20K is very, very clearly in the picture at that point, on a daily close or weekly close being stronger, confidence that we'll get down to 20K. But hey, again, look for those areas as great buying opportunities. Scale into them before there, because you could get front run and people might buy in at 23K, you know. Only other things I wanted, we've already been running for a good hot minute, but I did want to show the dominance. Dominance is going back up. A lot of people are exiting alts. And so usually, you know, in bear markets, when everybody's scared and getting out of their altcoins, they flow back into USDT, USDC, USD, and Bitcoin as the safe haven, get less risk out there in the market. And then also Bitcoin dominance. The CME market. You can see on the weekly time frame, we got some gaps. Which one do you think will fill first? Well, we got one right on top from this last week at about 38 or 39K to 40K. And then below here, we have one that didn't completely fill at about 32K, 33K. And some below here in the 24, 25K range. And then one up here, 52, 53K. One way down here. But yeah, just curious. If you have an opinion, comment in the chat, comment on the video. Let me know what you think. But really, guys, that's all I had for you today. If there's anything that you're interested in seeing on a chart, follow me on TradingView, follow me on Twitter. I am most active on Twitter. And if you like what you saw, again, please like, subscribe, stay with me. I'm going to get more active on here. Been mainly focused on posting on Twitter, building up my following on Twitter, but really want to get more active on YouTube because I can really talk through a lot more of what I'm seeing and give you guys a way clearer view of just a picture and a couple of comments. So I'll try to be way more thorough on here. And if you have any kind of questions or want to offer some feedback, please, on the live chat, let me know what's up and I will respond. I'm really good about responding and I care about what you guys are saying. So I appreciate everybody that's been following me, my thousands of millions of followers. But until next time, peace out, God bless, good night.